Good morning, everyone, and welcome to the European crossover webinar. And we actually saw crude oil retrace from the highs that we had uh, surged to eventually, which was up to 24.50. Right now, we're sub $23, and that did go on and weigh on equity futures. Initially, we saw a good strong open. Of course, come smack down, and then we're kind of in the middle of the road, a little bit lower than we were from Friday. And we can take a look at S&P futures and Nasdaq. You can see we actually opened up stronger above Friday's highs, or actually should say Thursday's highs last week. And then we came off quite a bit. Here we are looking on a 2-hour chart. There's our open here on a 5-minute chart. And you can see here it was just straight down. Quite the sell-off. And now we've just kind of middle of the road here. Actually just above, I think that's 3-day VWAP. Yeah, for now. And we know we saw that pullback down to about, what was it, 27.51 or 52 on Friday before we start to move back higher again. Here we are just below that, and you can see here with Nasdaq also having pulled back, has actually been a little bit weaker than SPOOs overall from what I've seen here, but holding kind of steady here to start the morning. I don't think we're going to get anything until we actually move into the cash opening. We did go on and see a pair back down here, 27.30. We saw a quick snapback rally up here, about 20 handles, which isn't anything to sneeze at, but we've kind of slid back in here. The market's had quite a bit of a run. I mean, I think a lot of people are surprised, me too, to the extent that S&Ps had come all the way back. I didn't think we'd make it all the way up in here. And I'm talking about even Friday above 2,800. We did finally see that pair back. We've also seen, take a look at crude oil quickly. So you can see here, I mean, obviously here's on the the book map chart, but certainly have slid right back down, and certainly no help here. We would have thought we had to get more support out of crude oil, and that simply has not been the case. Gold still remains strong. We're off just a little bit, but still remains quite strong. And then, as I mentioned, Nasdaq, just kind of same thing, similar with S&P. We'll just take a quick look at that. Let's go in and move into the news. To a certain extent, despite some of these moves, it's a relatively quiet morning. And looking at the calendar, we don't have anything here on the calendar for today, other than when we finally get much later past the U.S. session, and see some Kiwi data. but that's going to be it. And some Aussie data. So really nothing here. So let's go and take a look at the news, and then we'll move into the analysis. So here. In the oil market, sunk by coronavirus, giant output cuts make a ripple, not big waves. Minimal oil price gains on Monday show record output cuts by giant producers will still leave them with a mountain to climb to restore market balance. Industry watchers said with the coronavirus pandemic decimating demand just as stocks swell. The day after the Organization of Petroleum Exporting Countries and allies led by Russia agreed to reduce output by 9.7 million barrels per day in May and June, equal to nearly 10% of the global supply, prices inched up 1% on average, remaining 50 to 60% down for the year so far. That headline cut by the grouping known as OPEC may be more than 4 times deeper than the previous record set in 2008 and may provide a floor for prices according to some analysts, but the reduction still dwarfed by the near 30 million barrels per day in big demand in April, early anticipated by forecasters like Goldman Sachs. What's more, governments in countries around the globe are considering extending travel and social lockdown measures that have sapped that fuel use in order to prevent the coronavirus spreading. Even in these cuts provide a floor to prices, they will need to be able to boost prices to give the scale of inventory bills we are still staring at. Energy aspects analyst Verinda Choughton says, referring to storage tanks and ships around the world that are filling up fast amid the size and demand from end users, the absence of hard commitments from the United States or other G20 members, shortcoming of the deal. G20 nations have been urged to reduce the supply glut, with non-OPEC producers expecting to contribute the output cuts by another 5 million barrels per day. But there was little commitment from producers following Friday's talks between energy ministers from the group and Saudi Arabia. While the OPEC agreement is helping to stabilize the giant global oil market, the deal failed to reach the reduction levels anticipated by the market, leading to oil prices remaining stagnant. Takahashi Tsugi, president of the Petroleum Association of Japan, said in a statement, "We have OPEC. We hope that OPEC will continue the talks to stabilize oil markets," he said. Meanwhile, analysts said that while the core number of the deal suggests a near 10 million barrel per day cut, Middle East producers like Saudi Arabia, the United Arab Emirates, and Kuwait will likely have to be reduced by more than 23% cut to which they signed up as they begin to ramp up oil output in April amid a price war before the agreement was struck. The 9.7 million barrel per day headline represents a 12.4 million barrel per day cut from the claimed April OPEC production, given Saudi, UAE, Kuwait ongoing surge, but only a 7.2 million barrel per day cut from the 1Q20 average production levels, Goldman Sachs analysts had said. The next major focus for markets is May-June is watching for numbers from the U.S. Department of Energy on filling its strategic petroleum reserves with demand slumping. A veteran Singapore oil trader who declined to be named due to the company policy said inventory build will continue, albeit at a slower pace due to the OPEC cut. Most of the SPR are pretty full already. Probably China still has some room, but the rest, I doubt there's anything significantly added. Highlighting the scarcity of the available storage capacity, on Monday, Australia's Energy and Emissions Reduction Ministry said the country is working on an agreement to buy oil and store it in the U.S. SPR. China's world's largest oil importer remained the outlier. Its refiners are set to raise crude throw output by 10% this month from March. China is unlikely to make any firm commitment, especially as the Far East consumers are still paying a premium for Middle East supplies versus Western consumers. Outside the government's reserve stockpiling, which is highly guarded information, commercial reserve managers at national oil firms will only look at the economics and tank space available to decide purchases, said the official, referring to the commercial reserve departments under the state refiner. These commercial reserve centers under state major operates independently from the SBR, the official said, and they often act as swing suppliers to state oil refineries by loaning crude to plants at a higher price and making a profit, then retrieving them at a lower price. And then the only other FX news, this is the only FX news story of any real significance, and it refers back to the OPEC. The commodity currencies slipped against a safer haven rival, such as the dollar and yen on Monday, as a record output cut by OPEC and other oil-producing nations failed to offset broader concerns about slumping global demand. The greenback drifted higher against its Australian, New Zealand counterparts, widely seen as barometers for market risk, and the sign investors remain concerned about the consumption outlook for commodities. Financial markets remained on edge over the spread of the virus and severe restrictions on personal movement. The initial reaction suggests the decline in oil demand is well ahead of the output cuts that were agreed to. This is a negative for oil producers, and the dollar rose against the Norwegian crown, against the Canadian dollar. Trading could be somewhat subdued as financial markets in Australia, New Zealand, Hong Kong, and Britain are closed for the Easter Monday holiday. Major oil producers agreed to have the output cuts on Sunday. Oil prices have gone into a free fall on worries about the virus and a price war between Saudi Arabia and Russia. Currencies from Norway, Mexico, and Canada, major oil producers, got a boost on Friday as the agreement to cut began to take shape, while the futures erased losses earlier to trade higher. So as it says, trading could be somewhat subdued as financial markets in Australia, New Zealand, Hong Kong, Britain are closed for the Easter holiday. So that's going to certainly weigh on demand. So let's go and take a look at the analysis. So starting off with the euro. And you can see here we're in a very tight range. Now, if you saw the week ahead video, Blake made the case where technically over the next, couple of weeks or so, maybe a little bit further, we have the potential to move all the way up in here into this 12 area. And he also referenced as far as if they were to pass Corona bonds, and that would also be a major reason, which basically solidify the outlook for the Eurozone, or actually the euro currency. If some of these countries were to agree on Corona bonds, which basically strengthen what would be perceived notion that this is something that's really going to be endured. As we fell down here in these lower levels, a lot of people are saying, yeah, that just proves the euro, or as basically representing the entire Eurozone, it's never going to be what a lot of people thought it was. We're going to slide under $1. Well, that Blake's contention is that if we were to go on, if there was an agreement for those Corona bonds, would basically flip things on its edge, and we could certainly not only move up to 12, but made the case that we could even move significantly higher. So we'll see what potentially transpires, but we'll want to keep an eye on notions about the coronavirus bonds. That being said, we're in a very, very tight range. Looking out, we said the euro closed higher for the week after testing weekly support at 776 this last week. Initial resistance is going to be 955. A close above that, and we did poke our heads above 955, but we're below it right now. A close above that, allowing for a challenge of 1020. Support is going to be 880, followed by 833. So looking here, as I mentioned, it's going to be 955. We're trading in a very tight range. And on the downside, 880. quiet start for the week. Let's go and move into the cable. And we talked about UK close for the Easter holiday. Now, we have continued to move higher here with the cable, although, like I said, within higher, but within tighter ranges. Since the cable managed to close at new highs for the week, the pair will look to challenge 2602. I don't know how that got left up, but it should be 2602 with immediate resistance at 2521. So that'll be our immediate resistance looking outward, 2521. But we think that we are looking for a challenge this week of 2602 as we've closed higher, taking out the most recent highs here. We've got that close on Friday. With support at 2340 if we were going to see a pair back. Certainly doesn't look like it, but we're given that space. But, you know, considering where we're at right now, 2510, that would be a pretty big drop here. So probably have to allow, you know, for this right here. You see all this support coming in right there across here? That's going to be at 2340 if this market were to pair back. Certainly doesn't look like it right now, but we'll go with that, 2340. Basically an area you'd look at if you were getting long as to on, you would look for demand to step in at that price. Boy, are we trading quiet in the Aussie. It hasn't pulled back that much also. But you can see we've had a nice rebound off of that. When we broke lower here, this really opened the door for the market to move lower. We actually closed right on that level. Then we've had some follow through, and we've seen the market reverse back. And reverse back we certainly have here, closing above 63.03. So the Aussie continued its daily advance, clearing weekly resistance at 63.03, 63.02. The pair will look to challenge 63.97. Support comes in at 62.28. Well, still in a relatively tight range. And here's a 63.97. We're actually holding up fairly well overall, considering how crude's weakened. So resistance, as I mentioned, is going to be 63.97. And on the pullback, support at 62.28. Kiwi, like its cousin Aussie, finished a strong week, taking out weekly level of 60.77. The pair will look to challenge 61.47 with support at 59.75. So we're still just holding above this weekly level of 60.77. Haven't come off very much at all, although the advance, although a good advance isn't quite as strong as what we've seen with the Aussie, but nonetheless, we're still holding above the weekly level, 60.77. So looking out initially, once again, resistance is going to be 61.47. With support at 59.75. Now, the dollar is supposed to have gained against the Canadian dollar because of what we've seen in oil, but that has not been very much of a gain for the most part, but nonetheless, the dollar CAD spent most of the week under pressure. To start the week, support will come in at 38.90, which was just below this 39.23, although we opened right there at that level and we've pushed up since then. With a potential slide to 38.05, which would be the 50% of this entire move of 29.50 to 46.62. Resistance is going to be 40.95. Looks like we just made it to 41, followed by 41.35. So right now it's 40.95. And supported 38.90. And moving on to the dollar peso. The dollar peso spent the entire week sliding. You can see that here. Support comes in at 23.08. Low so far, 23.26. Followed by 22.85. So we're looking at 23.08. With resistance at 23.69. We're keeping it pretty tight here. And you can see here on the dollar yen, it's just been a gentle slide back. The dollar yen remains in a relative tight range. Immediate support will come in at 778. That's actually been the low for the day so far, 778. With resistance at 896. And that seems like a far fetch right now because we're nowhere near close to that, but that 778 came in right there on tab. We'll just go straight up with this level, which is going to be 845. It's kind of basically it's 846. So. And with the dollar index slid back into support level 99.35. That was our bias chart support for Friday, for Thursday, I should say. The index may find a respite to start the week, allowing a move back to par 28. The pair would need a daily close above par 77 to initiate an upside swing. Support will be 99.02. And looks like that's where we went to almost. Well, 99.35, but let's see here. Yep. 99.11. So we had 99.02 for our bias chart support. And with resistance at par 28. With that, let's go and move into the cross rates. So the Kiwi yen closed at its best levels for the week, taking out resistance at 65.31. The pair is close to challenging or open to challenging the weekly level of 66.39. Support will be 65.29. So right now the low's been 65.46. So we've got 65.29. And we said potentially to challenge 66.39. It might be a bit of a stretch right now, but this will be our resistance here at 66.39. Now, the euro yen has rallied from the recent lows, clearing 18.17. The pair remains bearish, but a challenge is open. A challenge to 1925 is a possibility this week, with immediate resistance at 1900 and support at 1806. Well, the low so far has been 1796. We'll stick with this 1806, although it did go past it. And resistance, well, we've certainly turned around and flipped right back lower now here. So resistance is just going to be the high there on Thursday, which is going to be 1874. Moving on to the euro odd. And this one's had quite the fall. We're trading in a super, super tight range right now, but the euro ought to continue to flame out. The market will be targeting 70.72 with immediate support at 71.23. So let's tag that support. And resistance will be 73.38. We're able to get a little bit of a bounce back. Despite this fall, and boy, what a fall it has been. Overall, you know, it's almost hard to say, okay, this is bearish now. I mean, it certainly have been down and down, but when you look at overall, it's still, look where we've been here. And the very, very short-term basis, I guess we could say bearish, but it's a little bit late to say, okay, now it's bearish. So we'll keep the overall move, which has been bullish. Let's now go on and move into the Euro Kiwi. The Euro Kiwi is somewhat similar to what we've seen here in the Euro odd. The Euro Kiwi is on pace to challenge the weekly level of 78.85 with further support at 78.25. So we'll go with the 78.85. With resistance at 80.93. Certainly it's due a bounce here. So there's our resistance going to be 80.93. And let's go move into the Aussie yen. The Aussie finished the week taking out 68.69. And you can see we've slid back just below that. The next challenge would be 70.51 with immediate resistance at 69.38. So we'll go with the 69.38 for immediate resistance. With support at 67.80. And let's go move on to the guppy. Now the guppy continues its advance with a target challenge to start with the week at 36.39. Immediate resistance is going to be 35.78 with support at 33.92. And once again, very quiet start to the week. And support's going to be 33.92. We'll just move that to one big pip. And let's go on and finish up with sterling odd. So the sterling odd, the pair remains on a downward slide, eyeing weekly level of 94.83, although we're kind of putting up a little bit of a fight here for support. Resistance will be 97.19. We've actually, that's been our high for today, 97.19, so that was our resistance. We'll actually just move just a little bit lower here. That's 95.40. And we're certainly paring back a bit. We'll just go with the lows right here from Thursday, and which give me 95.71. Because certainly this thing's oversold and would a bounce back certainly is not going to be out of the question. There we go. As I mentioned, it's a quiet day. Seeing the euro pair back just a little bit, but we just don't have a whole lot happening. We'll go back into the equities. And you can see here, we just when we came on air, we were right around 27.42. And we've dipped down to what, 27.37. We're about back here, so not really a whole lot has happened. And but we have seen crude oil dip as low as 22.50. Remember, we were just below. I think we were 22.95 at the time, and now we're 22.80. So it's still bouncing around. But gold is at 17.38 right now. Other than that, it's very quiet. Obviously, good reason, as we mentioned, Aussie, New Zealand. I think they mentioned Hong Kong too, as well as the UK, all are closed for Easter holiday. So hence the very, very light trading activity. But that completes it here. Thanks for joining us here. We'll see you in the chat room. And thanks for joining us here on the European Crossover webinar.